In today's video, I'm going to teach you how to use RSI Overbought or Oversold and Divergence in Tradingview. Start by opening your chart in Tradingview. To add the RSI, click the Indicators button at the top. Type RSI and select Relative Strength Index. A new panel will appear beneath your price chart. Click the Settings gear on that RSI panel. In the Style tab, you'll see the upper band set to 70 and the lower band set to 30 by default. These levels define common overbought and oversold zones. Keep the length at 14 unless you have a clear reason to adjust it. A 14-period input is the standard for measuring momentum and offers a balanced view across timeframes. Think of RSI as a momentum gauge that oscillates between 0 and 100. Comparing recent gains to losses, it helps you see when price may be stretched and when momentum might be shifting. When RSI rises above 70, the market is considered overbought, meaning price may be overextended to the upside. Instead of reacting immediately, wait for the RSI to cross back down below 70 to consider a potential short entry or to lock in profits. This cross-down signals momentum is starting to cool. When RSI dips below 30, the market is considered oversold, meaning price may be overextended to the downside. Again, patience helps. Wait for the RSI to cross back up above 30 to consider a potential long entry. This cross-up suggests momentum is recovering. Context is essential. In strong uptrends or downtrends, RSI can remain overbought or oversold for extended periods. Pair these levels with market structure to improve decision-making. Look for how price behaves at support and resistance, and consider whether the broader trend supports your idea. An overbought reading in a powerful uptrend, for example, might simply reflect strength rather than an immediate reversal. Next, let's cover divergences, which highlight weakening momentum and can precede reversals. A bullish divergence occurs when price makes a lower low, but the RSI prints a higher low. That mismatch suggests the downward push is losing steam, opening the door for a potential move higher. A bearish divergence occurs when price makes a higher high, but RSI forms a lower high. That signals fading upside momentum and the possibility of a downward shift. Treat divergences as early warnings, not guarantees. They work best when aligned with your support and resistance zones and when you see confirmation from the RSI turning in your favor or price rejecting key levels. Put it all together by combining RSI levels, crosses, and divergences with clear market structure. This disciplined approach keeps you patient, selective, and focused on momentum turning points. That's all to it. Thanks for watching.